Am I audible? Am I audible,
Yes,
Jitendra?
you are audible.
Am I audible, Jitendra? Okay, okay, fine. I'm disconnecting, Manoj. Okay.
Yeah.
There is a problem. We आपका आ गया है ना?
Perfect, perfect.
Hello. Yeah. Sidheshwar ji, do I am audible?
Yeah, Jitendra ji, you're audible.
Okay. Uh,
Is my
yeah.
presentation?
Good evening, everyone. And yeah, I'll share you the screen to you.
Okay, Jitendra.
Yeah. Uh, y- yeah. Good evening, everyone. Sorry for the delay. This delay due to some technical issue that we faced. We'll start immediately because of timing issue. So today's topic is a smart internal audit. The looking beyond the risk. Our speaker is Mr. Sidheshwar Bhalla. He is a partner BDO India LLP. So I just giving a brief introduction about him. Sidheshwar is a chartered accountant, company secretary. He's having around 15 years plus experience, professional experience. He's a member of India board of Indian Institute of Internal Auditor, and he hold a position of vice president II Delhi chapter. He's past associate with Deloitte, KPMG, EY, G, NM Raiji, and currently he's a partner in the BDO India LLP. Siddheshwar has held a multiple engagement related to various competencies, which include enterprise risk management, internal audit, business process improvement, designing governance risks and compliance framework, IFC, ICFR implementation and testing, SOX implementation and testing, quality assurance review, and developing a standard operating procedure. He has been working with various sectors including manufacturing, automotive, FMCG, retail, hospitality, healthcare, and energy and natural resources. He worked with various geographies, which include Russia, Canada, Europe, Latin America, Vietnam, Myanmar, Saudi Arabia, Bangladesh, and India. So he is also a very active speaker on corporate governance at mm, multiple forums, including Northern India Regional Council, which nothing but NIRC, Institute of Chartered Accountant of India, NIRC of Institute of Company Secretary of India, Institute of Director, Institute of Internal Auditors, Indian Institute of Corporate Affairs, Astrasure, Acromic Point, Corp Connect, Corptive, Bhartiya Vitta Sakari Samiti, Department of Public Enterprises. So with this broad experience which Siddheshwarji is holding, so today we are starting the important topic on smart internal audit looking beyond the risk. Siddheshwarji, I'm just sharing to you.
Yeah, Jitendra. Thanks for the introduction. Yeah, if you could share the screen so that it's visible to all.
Yeah, 1 minute. I'm just making presenter.
And I believe that everybody is on mute, Jitendra ji. So we'll
Yes,
open
yes,
the line for questions later. Yeah.
yes, yes, yes.
Okay.
Okay, so I'm making you organizer. So you can share your screen.
Okay. So Jitendra ji, just confirming from you that the screen is visible.
Yeah, 1 minute. Your screen is not visible actually. I'm just making.
So it's asking me to share, so I can share my webcam.
No, webcam is not required. You need to
Oh,
share your screen only.
so but you have asked for that. As in,
Uh,
once you confirm that the screen is visible, then I'll start.
yes, yes. 1 minute.
Jitendra ji, anything to be done at my end?
You're getting the request.
Not so far.
Uh, 1 minute. 1 minute.
So Jitender ji, there is an icon which is coming that no one can see my screen. Click to start screen sharing. Should I do that? Jitender ji, are you there?
Hello.
Jitender ji, there is an icon which is coming that I need to click to start.
Yes, yes, yes,
I've done that.
yes.
Is
Okay,
it?
you start now. Yeah, Sidheshwar, you can start now.
So welcome participants. I hope the screen is visible in front of you. Apologies for this inadvertent delay. Uh, Today, when we talk about internal audit, we primarily are looking at the corporate governance initiatives in an organization. Jitender ji, I'm not able to turn to the next slide. Is it from your end or my end? Some glitch again.
The issue will be on your end actually. Now it's a control on your machine.
Okay, fine. So when we talk about internal audit, we are primarily looking at the corporate governance initiatives in an organization. And in front of you, there is a slide which talks about an era of corporate governance in India. I would like to take you back approximately 2 decades. Frankly, I would like to take you back 2.5 decades when in India, the talks around globalization was started. Uh, Banking was initially the first sector, and other sectors followed soon. If you look at the slide, you will find at the initial part of early 2000, primarily the corporate governance initiatives that were rolled out were recommendatory in nature. It came out through some of the white papers like the Confederation of Indian Industries, they came up with a white paper. Similarly, Kumar Mangalam Birla Committee, Naresh Chandra Committee, Narayan Murthy Committee, all of them, they came up with white papers on corporate governance, which talked about that what should be a risk management system in an organization, what should be a board composition, how should good and effective corporate governance in an organization be. We then came to a point around 2004 when for listed companies, specifically for listed companies, clause 49 was introduced. Now what clause 49 primarily said was there were 7 things to do with governance apart from a lot of other things. It talked about a CEO CFO certification on internal controls over financial reporting, and this was only for listed companies. So any company listed on an Indian stock exchange, then by virtue of, sorry, there's a pop-up coming, so I'm just getting distracted, but yeah. So any company which is listed on an Indian stock exchange, then as per clause 49 of the agreement, there are 7 compliances primarily which were to be met from a corporate governance angle. One was the CEO CFO certification on internal controls over financial reporting. Another was board composition and audit committee composition, having a robust legal compliance framework, a management information system, code of conduct for prevention of insider trading, and it followed that way. Uh, as time passed by, India witnessed a breakthrough in the regulations through the Indian Companies Act 2013. So there were a lot of changes that came. From a corporate governance angle, if primarily we look at it, Jitendra, there is some pop-up again and again coming. If you can do something about it, it's fine.
My side, I'm actually removing that.
Okay, okay. So in 2013, the Companies Act got revamped. There were a lot of changes that happened, primarily on the governance side. Three sections which were earlier also there underwent a change. So one was section 134, which talked about directors' responsibility statement. And it spelled out that listed companies, the board of directors for listed companies have to lay down internal financial control framework, which is adequate and operating effectively. So this is verbatim in the law and it's in front of you on the slide. And for all companies, that means listed and unlisted, they need to have, the board of directors need to lay down internal controls over financial reporting, which is again adequate and operating effectively. So if we look at it, the bar of governance got raised further. The listed companies under clause 49 were required to give a CEO CFO certification on internal controls over financial reporting, which turned under the Companies Act 2013 to internal financial controls, and that was to be laid down by the board of directors. And for unlisted companies where the requirement was not through a regulation but from a good governance, it said that they must lay down internal controls over financial reporting, which is adequate and operating effectively. There is a limited explanation also which is given under the Companies Act, and it's there in front of you on the slide. It says the purpose, for the purpose of this clause, that is internal financial controls, it means policies and procedures adopted by the company, they should be documented. There should be orderly and efficient conduct of business. Safeguarding, so there should be mechanisms where the organization, a company can ensure that there is safeguarding of assets and prevention and detection of fraud and error. That means organizations need to identify the what can go wrong or the risk, highlight that what are the fraud risks out of the risks which are there, and have controls in place which is more preventive rather than detective. So it is actually talking about the complete control environment, how it should look like. I'll just quickly touch on the other two sections. So section 177, the audit committee. As per this section, the audit committee is supposed to evaluate the internal financial control or internal control over financial reporting frameworks and the risk management systems. And the auditors, which is the statutory auditors under section 143, have to give a report that the internal controls over financial reporting framework is adequate and operating effectively. The clause 49, which was there under in 2004, got revisited, and now we talk about it as Sebi LODR regulations, which is listing obligation and disclosure requirements. There was a change that got after IFC or Companies Act 2013, a change got introduced, and the change was that's in front of you. Though the CEO CFO certification on internal controls over financial reporting continued, but as per regulation 18, where the audit committee was supposed to evaluate the internal control of a financial reporting system in an organization, that got changed to review by the audit committee or evaluation by the audit committee of internal financial controls. Now, whilst I'm talking about internal control over financial reporting and internal financial control, just for the purpose of being on the same page, I'll give a quick example on this. And I'm sure all of you are aware of this, but just for the purpose of being on the same page. What the regulators said under the clause 49, or now what we call as Sebi LODR regulations 2015, was that companies should document an internal control framework which pertains to financial reporting. For instance, take an example that there is an invoice which is supposed to be processed by an organization and it's for the material that is received. So what normally as an internal control mechanism will be that once the user has given its acceptance and sign off, there will be a three-way or a four-way match. That is what we call a purchase order and a goods received note the invoice will be reconciled with these two, whether the rate is as per the purchase order and the material that has been received is as per the good received note. And once the invoice is reconciled with these three, it's a three-way match. If we refer to the agreement, a backup agreement with that, it will be a four-way match. Primarily, what is being done as part of this control is that we are looking at that if supposing 10 is to be paid for that against that invoice, is 10 being paid or not, or is there something else that is getting paid? So the controls are around financial reporting. If I go deeper into this example and try and link that, is 10 as a number correct to be paid, or should have been as a 9 which should be paid? That means I am trying to go into the operational area of the business. I'm actually going into the procurement function, looking at the efficacy and the robustness of the processes of procurement methodology and seeing that did they determine the optimum price at which the material should have been procured. So did they go for a tendering? Did they go for a 3-quote? And tendering could be of multiple types to determine that optimal price, whether it is 8 or 9. Now that is internal financial controls. That means we are going into the operational area of the business and looking at these effectiveness of systems and procedures and seeing that it's not only the amount that is being paid is recorded correctly, but what is being paid is also the optimum price. So where we are coming from is that if we look at the regulations, from a recommendatory mode, it went to a mandatory mode for listed companies initially. And today, as we speak, it is for all organizations, whether listed or unlisted. In 2017, we also witnessed a change in the tax laws, which was goods and services tax, the GST. The essence of having a good control mechanism in GST is that the systems and procedures are good or not. That means if you have control over your masters, vendor master, customer master, item master, inventory related masters, the recording is correct, and that will result in the correct invoice getting generated or paid, and the input credits which are to be taken or received will also get accounted accordingly. That means the regulators are actually wanting organizations to become more process compliant, more focused on systems and procedures. If you look at the next slide, the changing regulatory landscape in India. Today, when we go for an audit, we not only look at compliances which could be related to policies and procedures, but we go beyond it. For instance, if there is an organization which is listed on an Indian stock exchange, we have clause 49, which is Sebi LODR now. If it is listed on a US stock exchange, then Sarbanes-Oxley. If it is on a Japanese stock exchange, then JSOX. Similarly, IFC requirements. If it's a bank, from a Basel point of view. Ind AS, from a financial reporting point of view, Ind AS requirements are to be met. The MCA came up with a notification in around 2015 June that organizations, in case Ind AS is applicable, they must comply with all the Ind AS requirements. What we are saying over here is trying to hint on is that as auditors, when we look at the complete internal control environment, whether through a regulation or from a good governance angle, there are a lot of things that needs to be addressed and looked into. Now, one is from a financial reporting, which is Ind AS, IFC, ICOFR, JSOX, SOX. From a policy procedure, it is IFC again, that the policies and procedures should be documented. From a governance angle on the IT front, it is IIS governance. If there are contracts that have been entered, what are the compliances that are being met? The SLAs are being met, the contractual terms are being adhered to, so that there are no disputes which result in some sort of a litigation at a later stage. How I look at compliance, and primarily in audit, we say that we are looking at compliances. So these are the 4 pillars which I call for compliance. The first is the policies and procedures, to look at the corporate policies, code of ethics and all. It's not only the policies and procedures at a functional level, it's the policies and procedures at an entity level as well, whether it is to do with the risk management policy, whether it is to do with the fraud risk management policy, succession planning policy and all. On account of confidentiality reasons, there may be times when things are not shared, but I'm sure as part of the larger ambit, there are ways and means to address it. The second pillar would be the statutory and regulatory compliances. So this will include all the corporate and commercial laws, the financial laws, HR related laws. We have GDPR now to companies where there is data, private data, personal information which is sensitive and which is pertaining to the EU countries. The third pillar of compliance is the financial reporting. So today as auditors, we cannot hold back ourselves in saying that we do not understand IND-AS or we do not understand. So from a process point of view, we will look at internal controls over financial reporting. We will look at IFC, SOX, JSOX and all. But what about the IND-AS standards which are there? Are the companies complying with all that is also part of the ambit of internal auditors. The fourth pillar of compliance is the contractual terms. Compliance to the contractual obligations, compliance to the service level agreements, so that there is no subsequent dispute that arises, and where we actually land up in the second pillar, which is the statutory and regulatory compliance. That was more to set the context in terms of how the governance has moved over the past 2 decades from a regulatory standpoint, though it was always there from a good governance point of view. Now, if we look at an internal control value chain in an organization, how does it look like? Because that's what the internal auditors are actually doing. If you look at an internal control environment in any organization, it will spread in 3 pillars. The first one will be governance, which is to do with the entity level controls. Does an organization have policies and procedures for all its functions, or as well as at its entity level? Do you really need that? Is the tone from the top stating that yes, we need policies and procedures is at a governance level, the number 1 on the slide left hand side. Do we need a legal compliance framework? Do we actually need a succession planning policy? And all those things will form part of the tone from the top, which is to do with the governance. The second is operations. Here we are talking about the functional area. So for instance, if I take a manufacturing setup, primarily all my functions would get bucketed in 5 processes. It's a record to report, hire to retire, plan to produce, procure to pay, and order to cash. What are my controls in place against the potential risk, including fraud related risk in each of these areas? Anything and everything that is done in an organization has an impact at the end of the day on the financials, which is the trial balance, P&L and balance sheet. So that's the third part, the financial reporting. Now, if you just relate this with the compliance or the governance norms through regulators, from recommendatory, it moved to internal control over financial reporting, which is the third one, financial reporting. When we talk about IFC, and I'm being specific on India, we are actually including the second part, which is operations, internal financial control. And governance is common for both. Whether we talk about ICOFR, internal control over financial reporting, or internal financial control, governance is applicable for both. It's the tone from the top. So that's the value chain when we look at. What I'm wanting to hint here is that when we are looking at a process to be audited, and we call it a risk-based audit, we cover all of these things in some form or the other. The audit scoping needs to be perhaps done accordingly. Now, if I translate this into an organogram, and there's what we talk about, the 3 lines of defense. On the slide, you see at the top, we have the board of directors and the audit committee. Then we've got the CEO, senior management, followed by the first line of defense. The first line of defense is where actually the operations are happening, where actually the operations are happening. So the activity, the sequence of activities for a particular transaction is actually happening on the first line of defense. The second line of defense is more like a oversight, where we have the role of compliance, controllers, and risk management. This risk management is primarily responsible for the enterprise risk management of an organization. And the third line of defense is the internal audit, followed by the external audit and the supervisory authority. Look at a situation here. Now we are talking on robotic process coming into play. When we talk about robotic process, there needs to be logics inbuilt, queries inbuilt in the system, so that any sort of a decision through artificial intelligence, the machines are able to do that. So look at the first line of defense. The role which is there in some places on the second line of defense gets overlapped in the first line of defense. A good internal audit is which is linked to an enterprise risk management, ERM. So that means the second line of defense where you have a RM should have a close interface with the third line of defense. Perhaps the three lines of defense as we move ahead in the digital world may get revisited and may have a relook or reshape. I talked about the risk management getting linked to an internal audit. Let me share an example over here with you. An organization, in case it has succession planning as a risk at an enterprise level, at an entity level, that means the organization need to identify the critical positions in the organization. Critical could be running across, not necessarily the top level, senior level. Now, what will internal auditors do? Ideally, if this sort of a risk is identified in the ERM, enterprise risk management, the internal auditors, while reviewing the different processes, need to see that is there a job rotation, for example, what sort of a mechanism is in place to ensure that the critical positions have been identified and there is a way in which it will be addressed in the short and long run. So that's where I'm saying, and similarly, we can look at other risks. Working capital, for instance, if it is paucity of a working capital is a risk at an enterprise level. How does my bank reco, my debt collection period, my credit payment period, ultimately rolling up and supporting as a control to the overall risk if that organization has on a working capital, paucity of working capital. So that's actually to share some examples around a good effective risk management linked to an internal audit. When we talk about internal audit, we actually are talking about looking at the complete internal control environment. Though the regulators talked about ICOFR, which is internal control over financial reporting, it's actually a subset of the larger scheme, which is internal financial controls. And if you talk about internal control, it is slightly, it goes beyond the IFC, the internal financial controls. Now, what additional is there in internal control, which perhaps, as an example, which I was given on invoice verification when we talked about ICOFR and IFC, if I include the indenting process, the requisitioning process, the need identification, assessment of need of that material or product, it's actually, we are going into the internal control environment. That's just to stretch that previous example which I had shared. When we talk about internal controls in an organization, we are actually talking about controls at an entity level and controls at a functional level. At an entity level, on the slide, we've got few examples, and this is picked up from the COSO, which is Committee of Sponsoring Organization. Let me explain some of the entity level controls here. The first is, it's in a random order, not necessarily that way, business risk management. So all organizations have a risk management procedure in place. It may be formally there or not is a different story, but all organizations have. Every organization which is operating is looking at the external environment from a competition perspective, from a pricing perspective, from any regulatory changes that are coming. They are monitoring it. It may be formal or informal. A formal good risk management framework will talk about a risk management structure. It will talk about a risk strategy, which will include the risk tolerance and the risk appetite. It will talk about identification of all the risk at an entity level and then bucketizing them into strategic, compliance, operational, and financial. And these are all emanating from the various functions that organization has, and ultimately prioritizing those risks. Today, when we talk about good business risk management in a formal way, I'll refer to COSO 2017 as well over here. The Committee of Sponsoring Organization 2017 has given a guidance on risk management, wherein it says that risks that are identified, it should actually feed the strategy as well. Do I need to revisit my strategy when I'm talking about a risk? Look at the slide in front of you. An organization has a vision and a mission. I'm talking from the top to bottom, top left to bottom right. An organization has a vision and a mission. Now that vision mission could be that you want to actually expand 3 times of your turnover in the next 2 years or whatever time frame. There are certain strategies that are made to achieve that vision mission statement. Those strategies could be organic or inorganic. Organic could be that you perhaps have some expansion, internal expansion, capacity expansion. And inorganic could be that you go in for some acquisitions, some joint ventures, have some cultural chain, align all those things and move on. Now, when these strategies are built, it's actually to do with the people, process, and technology. Do we have the right set of people? Do we have the right organization structure? Do I really need a finance function? Do I need a marketing function? Do I need a manufacturing setup? And all those things. Sometimes we take it as a given, but do we need that? So creation of an organization structure, manning it with the right skilled people with the right quantum, and setting up of processes. Within the processes, we set up sub-processes. Procurement, for instance, as a process may have a vendor master management. It may have a requisitioning, ordering, receiving, invoice processing as a process. And then we look at a sequence of transaction and say that what are the risks or the what can go wrongs that come. Now, when we look at a risk management, intelligent risk management function, it starts right from the vision's mission statement and goes bottom down to the risk at a functional level. At the top level, it is an entity level risk. And as we go down, we percolate and link it to the functional level risk. Similarly, we've got other examples of entity level control, business ethics framework. Does an organization need a whistleblower policy? An organization can do without it also, but do you need a whistleblower policy or not? If you need a whistleblower policy, what should it constitute? Should it have an ombudsperson? Should one be an ombudsperson or two people be an ombudsperson? How should the reporting of exceptions go from a whistleblower policy? A code of conduct. What if a fraud is detected? What if in the fraud, the top level officials are held responsible? What should be the incident response mechanism is something which we'll talk about as a whistleblower policy. And also it is actually, if you ask me, linked to a fraud risk management policy. It's part of it. Does the organization have an internal audit function which is independently reporting to the audit committee? Though administratively it may report different, but can the CAE of an organization pick up the phone and talk to the audit committee chair? Are the roles and responsibilities identified in the organization? Do they have segregation of duties? Does the organization have a legal compliance framework? Means, has the organization identified the various applicable laws, the various provisions in those laws? Who would be responsible to comply with those provisions? What are the timelines to meet those provisions? What if a change in the law is coming? Who tracks that? How is it proactively addressed? A robust, a good legal compliance framework will talk about all these things. A fraud risk management policy is actually to do on similar lines, which is I just explained on whistleblower policy. Does the organization have a disaster recovery plan? Is there a business continuity plan in place? Primarily spelling out, is there a dependence on a particular vendor, on a particular customer? Are we dependent on a single location? Does the organization have a succession planning in place? Is the organization having a good MIS, a management or operational review? A good MIS structure will talk about the top, mid, and the tactical level. KPIs, key performance indicators, getting identified for individuals in each function, mapped to the functional KPIs and to the overall organization KPIs. The monitoring mechanism of these KPIs is linked again to each one of these at a complete organizational level. So these are some examples of entity level controls. As internal audit, we look at most of these things at a functional level, but we somewhere need to link it to the overall organization. Similarly, the process level or the functional level controls. Now, under the Companies Act 2013, the requirement by an organization to have an internal control over financial reporting or an internal financial control framework is you need to evidence that the organization has documented policies and procedures. The risks have been identified for each of the processes that are covered. The mitigation controls in place for each of these risks are also documented. Whether a risk can contribute to creation of a scenario which is a fraud related needs to get documented and identified. The controls against that particular fraud risk, the tone is that it should be more of a preventive in nature rather than a detective in nature. So at a design level, do the organizations have all of these things in place or not? So we've looked at what the regulators have said. We've seen what an internal control value chain looks like. When we talk about internal control, it is the entity level control and the functional process level controls. Where is the world moving when we talk about internal audit today? And these are when we talk about an internal audit framework, these are the 5 components of it. As a structure, the internal audit function needs to be independent, reporting to the top so that it remains objective. From a people point of view, it's not a multi-dimensional team. It's a multi-skilled team. That means an individual who is an auditor understands processes, understands risk, should also understand ERP, should also understand fraud risk, should be able to look at the processes and comment that can we have a robotic process institutionalized, not that you actually start implementing a RP or a robotic process, but can that be done? To what extent we can leverage on the existing ERP, whether it's a SAP, Oracle, Tally, whichever ERP is being used, and have we optimally utilized it or not? So the skill of the people, and obviously it comes with the business understanding, with the industry knowledge, that's a given. From a process point of view, is the internal audit function more like a cost center or a profit center? Is it able to give benefits, at times tangible, at times intangible? Tangible could be where you simply give a cost saving or a cost reduction. And intangible could be where you talk more in terms of benchmarking the processes from best in class. From a technology point of view, are we using data analytics? We're talking about big data in today's times. Are we using data analytics? And data analytics is being used by or implemented by team members who understand the processes. And from a strategy point of view, it's the most important again. Is internal audit contributing in terms of the strategy which has been institutionalized for an organization, and will it lead to achievement of the overall objectives of the organization? I think this is something which internal auditors most of the time are not commenting, not sure how much they are looking, but that's where the world is moving. The ask by the board of directors is the internal auditors to comment or look at it. Is our strategy in line with that? And it's actually, if you ask me, from a COSO 2017, Committee of Sponsoring Organization 2017, it's clear-cut saying all these things. Look at a risk and see whether it is feeding to the strategy or not. I'll give you an example here, and it's a bit of a primitive example. There was an era of typewriters. Had the typewriter companies continued to go for an expansion mode and not think of computers and laptops, perhaps there would have been investment which would have been just dead. Today, when companies are talking about manufacturing laptops and all, it's actually replacing by smartphones. So do we need to diversify our portfolio instead of expansion going expansion? That's just one simple example, but similarly, it can be for all types of businesses. How do we feed to the strategy? How do we focus on transforming the way internal audit is done? Now, look at this slide in front of you, top to down from the left side. From a documentation heavy world, we are moving to a data heavy world. From a checklist based audit, we are moving to a risk based audit. We are doing data analytics and seeing, do we really need to have an enhanced audit scope covered, or we go based on data analytic insights? Do we really need to be present full time on the field, or there are a lot of things that can be done off field and limited on-site presence is required? Do we call it an issue identification, or we say an improvement opportunity and fix the system? Do we go for reports which are more voluminous, either a Word document or a PPT, or we go for an interactive report which is visualizing and more thematic? One top sheet at a summary level, with a click of a button, you go, if in case the management is interested to look at it in detail. So all points get addressed in a summary slide. And with a click of a button, you zoom in and cut across geographies as far as that organization is concerned, or different product portfolios. So that's where the transforming is happening in terms of internal audit. Now, when we talk about all this, as internal auditors, we really do a lot of hard work. How do we start doing more of a smart work? The ask from an internal auditor is also changing. Looking at risk, having business understanding knowledge is something which is a given. Today, organizations are talking about robotic process automation. Can I automate my finance function or sub processes within that, and similarly all other functions? The first question which internal auditors, and at least I can share that thing with you, is they are asked, is my ERP optimally utilized or not? I made a lot of investment there. A good ERP optimization would result in something like a 70% of automation. But yes, the auditor should go to the next level and say that, yes, this is what the ERP can make an automation, but here's the roadmap for a robotic process that can be given for any of the sub processes. Advanced analytics again is a given. We need not restrict ourselves only to looking at risk and seeing that the controls are in place or not, but also giving dashboards around fraud risk. The question normally that is asked is there any sort of a red alert? Can you give us comfort on that or not? I think as part of the exercise that we do, if we include a dashboard on fraud related risk, it's a comfort to the management as well as to us. As far as compliance is concerned, all the 4 pillars get addressed. It's not only the policy and procedure or the statutory and legal, it's the contractual compliance as well, and the financial reporting norms that needs to be complied with. A smart internal auditor will have a complete 360-degree view of all the things, whether it is financial, operational, from a risk standpoint, whether it's a fraud risk, from a looking at the control environment, is the control tending more towards automation or manual? That's actually looking at the ERP optimization and the roadmap for a robotic process automation. The slide in front of you, I just talked about it, though as internal auditors, we need to have a good knowledge about policies, procedures. At the same time, if there is a IT understanding, the internal audit team needs to be, it's not that a separate team needs to be there. For a journal review like a IT journal control, the internal audit team needs to be skilled with that. Perhaps something like a vulnerability assessment and penetration testing is which we can have experts to look at it. Similarly, looking at anti-fraud controls is something which the auditors do. But if there is an investigation that needs to be done, is something where the forensic experts come into play. Laying a roadmap for automation is something that can be visualized by a smart internal auditor. And similarly, the ERP optimization. But to actually make it happen, the ERP implementation or a robotic process automation is something where the other experts will come into play. This slide in front of you is primarily to do with the good data analytics. Today, when we talk about big data, we have to have smart data analytic techniques done by people who understand the systems and processes and can actually relate it to the complete business understanding as well as the process understanding, so that the outliers, which by default should not be something which are fraud indicators, get removed. And data may rest in different formats in different systems. It has to be, we can actually do it either in Excel or an IDEA or an ACL tool and all, so that to clean the data, merge it and come up with a good report result. And DA or a data analytics is something which will help us to have an interactive internal audit report put forth in place. Now, this slide is particularly talking about the data analytics journey across the planning, analyzing, execution, and the reporting stage. Right from the point that we hit the field, we look at a data analytics and see that where we need to go deep into it, have an understanding, detailed understanding, generate insights, remove the outliers, collaborate with the subject matter experts, and most of the times in different types of industries it is required, whether it's oil and gas or a hospital, just to name a few. Do a complete root causing, have a report which is an interactive one, and finally close the chain with a follow-up. If you look at a robotic process automation journey, these are the 5 steps which are listed on the slide. The first step is something which the internal auditors should do, which is looking at the process, assessing what are the manual interventions, and recommending automation opportunities which are there. So that, and this is all after leveraging the ERP which is in place. Now once that sort of a assessment has been done, building a business case, creating an optimal operating model, identifying the automation partners, and finally executing is something which is not to be done by internal auditors, but the first step could be, and I perceive this as one of the questions or one of the inputs which the board and audit committees will be expecting from internal auditors. Now when we look at, yeah.
Yeah, 1 minute. So attendee, just want to recap you. At the end of the session, we'll have a 5 to 10 minute time for your questions and answer. So anything,
Sure.
any questions you are having, so please free to put up your question. So accordingly, we can identify the question, and we at the end of the session we can take that questions to you.
Sure.
Sorry, Sidheshwar ji, for
No,
putting you
that's
in
fine.
between.
That's fine, Jitendra ji. Yeah. I will take just maybe 5-7 minutes more and then we can take questions. Yeah. I am conscious of the time that's there and what we lost initially. Yeah.
It's
So,
okay.
yeah. So I'm on the slide where we are talking about driving a sustained systemic improvement. Here we are saying that from a manual world, we move towards an automated. From a detective control, we move towards a preventive control, and from a rigid system to a business supportive system. Now, just to share with you, an automation of around 70% is more like optimal if we do not talk about a robotic process. From a detective to a preventive, something like 80% control environment at the max as a preventive control is good. We need to have detective controls so that it actually supports to another lot of frauds. Now, after all this, there could be some issues which could be a cost leakage, which could be a apparent fraud scenario, or non-compliances to the varied 4 pillars which I spoke about earlier. Now, how do you ensure a sustained systemic improvement? Plug in the cost leakage points, have strong mitigation controls in place for any sort of a fraud risk, and ensure that the non-compliances are proactively identified and met and addressed. Now, this slide which is in front of you is primarily talking about that in today's times, when as internal auditors we face the audit committee or the board of directors, most of the times we are expected to give a comfort around internal financial controls or internal controls over financial reporting, unlike SOX perhaps, most of the times unlike SOX or JSOX. I think that we have the common data, we have the common population, the common sample. We actually do the same exercise in terms of process understanding. So there is as one goal, and that's what after the rollout of the Companies Act 2013, which expected organizations to have these frameworks formally there, internal financial control and internal control of financial reporting. The expectation was that the internal audit scope or the planning, all these things should get dovetailed, included. And a good way to cover all this aspect as part of internal audit plan is a 9:3. That means after 9 months, you look at a plan. And this could, I'm not saying that this is rigid. It depends on organization to organization. It could be a quarterly as well. But from a coverage perspective, so that we do, because as audit, we may cover some processes in the initial quarter and not in the subsequent one. It's good to actually look at a 9:3, 9 months. After 9 months, you look at the key controls in IFC or ICOFR, and after 3 months, you again look at the balance so that the coverage is exhaustive. Linking a ERM, enterprise risk management, to an internal audit plan is something that I've elaborated on this slide, and I just gave an example a while back also. That's what a smart internal audit would do. For a listed company, it'll not only do internal audit, but also address the IFC requirements, do a ERM-based approach, and address other regulatory requirements. An unlisted company, it's IA with ICOFR and a risk-based approach. Intentionally, I've kept it as a risk-based approach because when we call risk-based approach in practice, it is a functional risk. So I've given some leeway on the unlisted, but yeah, we can do it on ERM-based. For large global companies, I think, again, setting up an internal audit hub, doing a smart IA, integrating it with SOX apart from ICOFR and IFC, and an ERM-based approach. That's something which I'll talk about in terms of smart internal audit for different types of organizations. Jitendra ji, we can take questions now. Participants, please feel free to raise your questions. Jitendra ji, are you there?
Hello.
Yeah, Jitendra ji.
Yeah, Sidheshwar ji.
So I was saying, if there are any questions, we can take that now.
Okay, from your side, it's over.
Yeah.
Okay. Yeah, thank you very much for this session. It's one of the very best session. I see that there's so many things actually you covered in the session. I feel whatever things required as part of internal audit, each and every part actually you covered in this presentation.
Thank you, Jitendra.
I see there are questions over there. One first question is whether it is mandatory for listed company to have external internal auditor or the in-house internal audit team who can meet the requirement of internal audit as per the requirement of statutory requirement.
Okay. See, if you look at the Companies Act 2013, and earlier it was not there, it doesn't say the audit should be internal or external, but it does say that the auditor should be a CA, ICWA, or anyone who the board of director authorizes to do the audit. So that's what the law as of now mandates, but it is not internal, in-house or external, if I get the question right. Yeah.
Yes, yeah. So means that their question is whether it required to be in-house or outsource or anything is okay as per the statutory requirement in case of listed companies.
So as of now, under the Companies Act, if you see, it talks about the qualification, who can audit, and it's not only the CA and ICW, though it is explicitly stated there. It's also the board of, so the onus is cast on the board of directors if they can nominate anyone. So it can be an in-house team also, not outsourced, not necessary for that.
Okay, so it means the company can have an option, either they can have the in-house or outsource also.
Yeah.
Okay. The next question is, what it is to be a good idea to have internal audit and ERN to be handled by the same person or separately.
It
And
should be
what's your
by
experience
separate.
about? Uh,
It should be by separate team, but it should be hand in gloves, if I can say so. It should not work in silos. It should work together, but they are separate teams. The risk management function is a separate function, and the internal audit function is completely independent, reporting directly to the audit committee.
okay. Okay.
That's what we
Then,
saw in the three lines of defense slide, line defense line 2, which had risk management, and the defense line 3, which had internal audit. But yes, the risk management function and the internal audit function should work in such a way that there's no miss that happens. So everything gets addressed and covered.
okay. The next question is, are we moving towards the exception base once we set up the automized ERP or data analytics as part of the internal audit practice?
So there are two things that can be done as part of analytics. It can be management by exception and management by objectives. Now, as part of audit, unfortunately, we talk about management by exceptions, but from a business point of view, we can have analytics, which is management by objectives. So both things are possible. In my experience, I have seen that from internal auditors, it is not only the exceptions that needs to be highlighted, it's a positive assurance also that most of the times is expected. So I think when we talk about the company, and it's in reference to the Companies Act 2013, where we talk about IFC and ICOFER respectively for what gets applicable to the company, when we say that, okay, as a dashboard, these are the exceptions that are coming out, we are indirectly saying for the other things, it is a positive assurance.
Okay.
So the world is
Uh,
moving towards both. Yeah.
yeah, this is moving actually towards the automation of everything. So audit is not exception for that.
Yeah.
Okay. The next question is, what is the role of internal auditor from IT security perspective, especially in case of listed company?
See, when we talk about the role of internal auditors, it is to look at the complete internal control environment. We have segregated it as ITGC, as network controls, at application controls. But if you ask me, as an auditor, we need to look at all of these things. Look at just a hypothetical situation. If there is a potential fraud that happens, the internal auditors are questioned. It will, so the auditors cannot give this defense that no, we have looked at only some parts of it and not. So if you have not looked at some other parts, did you do a complete risk assessment, and based on that you identified that okay, this was not an area which was required to be covered. I think in, if we look at today's times, when we are talking more on digitization, IT related controls, whether general controls, application controls, network controls, is it's imperative to cover all of it.
Yes, yeah. Okay. The in same relation to question, since you mentioned the IT, the question is in same line. What are the challenges of auditing in a digital age where most of the evidence is in soft copy format, and how we ensure the document is authenticate?
See, I think we should not have a perception that when we say evidence, it is a hard copy. It is fine if we have it in a soft form also. Most of the times when we do testing for internal financial controls, the data or the evidence of what has been tested is in a soft copy form. So that's perfectly fine. I think in today's time of digital world, most of the audit checks can be performed off field by usage of whatever system the organization may be using.
Okay. Hello.
Yeah, yeah, I'm there.
Yeah, yeah. Actually, I see there are so many questions actually which coming out for the automation and the robotic parts. So I think from now over the period, actually we are moving from manual driven audit to the automation driven audit.
See,
So again, in
that's
the
that's
next question, yeah, the
yeah.
next question is in the similar line only. What are the risks in robotics process automation? Can you put some lights on this concept?
See, firstly, I would like to clarify that the role of auditors will always remain. It is not going to change. we need to change ourselves as looking at how do we audit things. Yeah. Today, when we talk about audit, we are looking at processes, sub processes, and looking at a sequence of activities, and some of the activities are control based activities in that sequence of a transaction. Now, the same thing will continue in a RPA environment, in a robotic process environment. It is only that the process will get digitized instead of, so if we go say 5 6 decades back, we will say the documentation of a requisitioning and ordering, invoicing, payment process was all manual. So we had those registers, ledgers, and all that stuff. It has moved to an ERP environment. The future is that through artificial intelligence there will be decisions which will be rule based. The queries will be inbuilt in the logics will be inbuilt in the system, and the decisions, most of the decisions will be taken. The role of auditor, a future, I would say a smart internal auditor in today's times as well as more in future, will be to look at that all sort of scenarios have been covered or not, when the logics have been built in or not, because otherwise the decisions that the machine takes based on an artificial intelligence will become incorrect.
Okay, so it means even by looking to this future scenario, it means the auditor needs to have, I can say, not the basic, but as a medium level of understanding of the IT or maybe automation.
See, a true or a smart internal auditor in today's times and the future is not that who understands only risk and process. The
Yes,
the the auditor has to have an understanding of fraud risk, has to have an understanding of a good understanding of how ERP works, what are the
yes,
various controls that can be automated, what do we do when a RPA is. So the auditor may not necessarily know how to implement a robotic process, but should understand that when we say a robotic process, for instance, if it's an accounts payable process, what are the different things that is going into the automation of a AP process, an accounts payable process, similarly for all other processes.
okay. Okay, I think you already, there is one more question, but I think you already put that answer also. When everything is automated, whether the role of internal auditor be less than before. So
No,
as
it
you
won't be
mentioned,
less.
there will be, sorry,
It
you
won't be.
continue, please.
It won't be less. We will continue the same way, but we need to become more smarter. We need to look at things differently. And when I say differently, it is actually looking at the system. So we need to actually embrace technology, if I can say so. We need to embrace technology. We don't need to be afraid and say that this is what the next generation is going to do, and it's not for us, or the change is still far. I
Yes,
think we
yes.
continue to do the same work, but differently.
Yes, yes. So it's like that, the like previously we used to do the compliance requirement, understanding the what are the rules are changing, what are the new amendments are coming. So now there will be a scenario that the auditor needs to even understand what are the new technology is coming and how is affecting to the organization.
I will put it this way. There was a time when we used to do vouching and we used to put red marks and green marks and all that. Yeah, maybe perhaps we do it now also at some of the places. But the world has changed. We have moved to the world where from a hard copy it is actually a
Yes,
data sensitive world. Yeah, so perhaps we cannot use those red and other. So we can use it in computers, but that's not what we do. So we are doing the same thing. We are performing checks, but the way we are doing has differed. That's what we need to
yes.
do.
Okay, so thank you very much for the questions from audience, and I hope your all the query have been put up properly to with you. And Siddheshwarji, thank you very much for this session. We saw that the presentation was covering so each and every part of the internal audit from your side, and it's a very value addition to each and every people who are listening. And for me also is very valuable, and thank you very much from your side. And the lastly, I want to say sorry for the delay for this presentation due to some technical hinge.
So thanks, Jitendraji, and thanks to all the participants. Yeah,
Yeah, thank you. Bye.
thanks. Yeah.